Hey, how's it going, guys? And in this video, we are going to talk about the two most important things that I think make a trader successful or unsuccessful in this business. Now, funny enough, part of one of those two things is not actually strategy. I believe that you could go and trade the retail way and go trade trend lines and anything of that sort. You could trade smart money and smart money only. You could trade smart money with a mix of fundamentals only. You could go trade Wyckoff. You could go trade the crescents of the moon and the stars in the sky if you want to and apply those to your charts. As long as you had risk management and sound risk management, that trade would go fine. Now, the two most important things that I see that people lack when it comes to this market and getting great entries, and by the way, we're going to talk about these two entries on here, is first and foremost, as all of you know, risk management, but second and foremost, sticking to a bias. People forget a lot of the time that when the market is delivering them price in any way and they have a bias, even if it is something like a trend line, that, you know, sometimes the break of that trend line or some kind of formation or some kind of engulfing pattern or some kind of supplier demand zone setup or some kind of Wyckoff accumulation or distribution does not determine whether your entire bias can shift. If you have a daily bias, a weekly bias, this is why we conduct top-down analysis from the actual top. When you really do conduct analysis like that, what you're doing is you're putting your mindset or you're forming an entire perspective over what you believe the market is going to do and how you're going to approach it. Just because something on the lower time frame happens that isn't in line with your higher time frame but has not invalidated your higher time frame, then you shouldn't be switching your thing. So the two most important things when it comes to literally being profitable in this entire market is risk management and secondly, your bias. When you get your bias and you know how to stick to it and you get your risk management down, those are the literal only two things you need. Now, the third thing, of course, like it's kind of a little subsection of it, maybe a 2.5 if you want to call it that, is understanding that your strategy actually has some kind of edge. Now, guess what? A retail trading strategy with a trend line, with a formation of a shooting star, with their little pin bars or whatever else they do, is a fully functioning strategy. And if you backtest it properly with given set rules to how you want to enter it, and you forward test that and you take journals of it and whatever it is, then that strategy is a winning strategy that all you need to do now is stick to your bias. And secondly, because part of the bias is your actual trading system, and secondly, your risk management. Once you understand how to stick to a bias that you formulate yourself and stick to risk management, nothing can go wrong. So now that we have that over, let's go over how we caught this sell on gold right here. We'll move this over for a second. This is the mentorship. You guys can join that. That's only available at the link in the description. Do not be scammed. There are people scamming. As you guys can see, people were catching insane things on gold today. Even some people caught a better trade than me myself. Some people caught a smaller entry, I believe in here or in here, and got to run that all the way down rather than just where I got to run it to. I was still only looking at partials because of the way I imagine my trades, only at this sign of weakness here. So at about, actually, I think it was a 1 to 3 that I partialed at. So I partialed 1.5% there, and then we continued to new lows, and I didn't lock in anything. I just collapsed my position here since I was asleep this morning and didn't really see it. But as you guys can see from the mentorship right here, some people passed, this guy passed his challenge. He closed in 80%. He closed 80% of his position at 1 to 10, so his position already ran more than mine on his first entry. So, you know, like, we have people that are actually catching the same trades, but even better in some cases. And the reason I want to talk about this is because, so here's the original trade I sent out, just looking to get below the sign of weakness into the areas down here, but more primarily down to these liquidity places. And as you can see, we pretty much took that out very easily. And continued significantly lower, me locking in my 1 to 6 with my partials along the way, and it dropping lower. But the reason that I wanted to talk about this is because in this case, you guys can already see that we're not operating again on the 30 seconds or 15 seconds. I wanted to take a break from doing something like that because I have done that a lot to you guys. But in this video, we are going to cover a very small time frame entry and a higher time frame entry and how both of them were the exact same. Right, so you might be able to see it right now, but there was actually a very small entry right here that ran 1 to 2 total, and even though it got liquidated right here, the trade overall was a winner for me because of the way that I manage my risk, just like this one right here. So actually, well, this one just ran to be a complete winner, and it could have actually ran more, but you never know if this wants to happen okay? Or if this wants to happen, there will be times where price does not want to give you the setup it wants to give you, and it won't leave a footprint, and it won't leave a nice supply and demand zone, and it'll come and take it out completely. Other times, it's going to tap into your last areas of supply, whatever it might be, give you the distributions you need, give you the test of those distributions that you need, and give you the breakdowns and the markdowns that you're looking for that come and run long-term liquidity, or at least what we presume to be long-term liquidity. But despite the fact that both of these trades right here were based on two very different time frames, this is a 15-minute entry and this was a 15-second entry, both trades were profitable and both trades made a different amount. So if we go in here real quick, I'll just scroll through my trade idea. So that was that sell, and then the buy, you'll see it right here. The original buy, where was it? Yeah, the original buy was right here. You can see the 15-second inside of this area, so we'll take a look at that in one moment. And yeah, we can go take a look at it right here. So at the time, this area right here was actually tapping into this mini demand zone. So if you find this last down candle, if you guys can see this right here, this area is untapped, and for me, that's a considered valid demand zone from which I wanted to buy from, because this means that this area specifically, when there was selling pressure on behalf of the institutions, and then they bought up extremely hard, they left behind an area that was unmitigated completely. So in our book at mentfx and everything like that, we call that a demand zone. So I had that area marked out, as you can see. Let's just replay price up to this point. And at this exact point, I did not know for shit whether price wanted to hold here or not. All I knew was that this point was unmitigated, and it was inside of a larger mentfx block, which I was looking at, which is again only part of the mentorship, but you guys don't need it. All you got to recognize, this is a demand zone that was left behind with wicks that never came to mitigate it, thereby leaving behind liquidity just above it. So as per smart money concepts and institutional order flow, we're looking for the clear of the liquidity right below this low, to tap into this demand zone and continuations higher. Lo and behold, we get to a 15-second chart and we begin to see price deliver us a schematic. We have the selling climax put in place, the automatic rally, the secondary test, creating some intermediary term lows in this market, the moves below them, of course, the selling pressure on behalf of the institutions coming to take and liquidate those lows. In this case, we only have a type 2 schematic. If you use this as your selling climax, which you could have done as well, then you would have had the selling climax, the AR, the ST, the STNB, and spring, right? So in this specific case, you actually have both type 1 and type 2 schematics. And again, we're going to go over Wyckoff more in depth when I put together the public videos on overall Wyckoff once I'm done with the private. So we have this playing out, and at this point we are still not interested in being buyers, so I'm still waiting on this overall. And despite the fact that it's a 15-second entry, it's actually based off of a 1 minute or a 5 minute demand zone, right? So we have this play out. It looks like we get this STNB. We actually get a test right here, intermediary, leaving behind this demand zone, and we break higher. As we break higher here and begin to break structure, I am someone that likes to enter prematurely, not just on the demand zones, but also on the overall schematic. So in this case, I entered a buy right here where the AR was, which is basically the trading range, the inner trading range of the schematic. So when I entered here, all I was looking for was partials actually above this high right here. So as you guys can see right here, and as you saw in the last video where we went over the daily process I used to get involved, my first RR in this case is actually very, very poor. However, due to the way that I manage, my win rate usually sits at around 80 to 90% because I like to manage my trades this way, and because I'm a very aggressive person in general, right? So my personality wise, I don't have the stability to sit there and let stuff just kind of run in unrealized profit. So I like to realize profit relatively early. It's the way I like to trade. If you guys don't like it, you don't have to do it, but use the concepts to form your own way of trading. And again, like I said, there are people that catch the same thing and actually have it run much more R, but there's also people that catch this, don't move the risk, don't break even at certain points, and also lose these trades. So again, part of your entire system is understanding how you validate your own bias, how you get involved, and how you partial along the way, because you need to manage your risk. And that's literally all that's going to matter. So for me, my conditions for entry are met. I enter under those conditions. Price actually does come back to the last demand zone. So as you know, you could have traded this. You could have traded this open. I myself did not trade this. I could have. I wasn't at my computer at the time. I let it do its thing. As it began to break higher, I was already looking to partial or actually break even at this point. So instead of breaking even, I just partialed some of my position and let it run a little bit more, looking for it to get to at least this supply zone here, because as you guys can see, it's relatively unmitigated. It was the last buy candle before the down move that broke down in structure. So if price did want to continue going significantly lower, it would happen at this point, right? So again, we're utilizing the smart money concepts that you guys have access to throughout the entire channel and utilizing those to manage our trades. So again, the way you manage your trades is going to be up to you, but just understand what your bias is, how you validate that bias, and how you get involved on that bias. So again, we're looking at a 15-second chart, but this is no different from what you're about to see on the 15-minute chart. The exact same entry criteria for seeing Wyckoff, for entering on that Wyckoff, whether it's at the demand zone or at the overall schematic, because you understand that a schematic overall, if you've ever read any Wyckoff, can occur and you can have a backup which comes just to the outsides of the AR or maybe a little bit deeper, and the continuations occur, right? I trade both of these. Sometimes I enter with a smaller risk here and a larger risk when we get to the last possible demand zone, because I'm getting it for what? A better price. And after that, as you guys can see here, price does indeed run perfectly to the unmitigated portion of that supply zone and comes right back and stops me at break even. Now, this trade itself looks like it was a loss, because if you watch this out properly, right? If we actually watch this trade play out, you never got really higher prices. Maybe you got another partial here if you kept holding, or if you got in here, you know, that was a great trade. And again, just looking at this, just waiting the extra step or trading this demand zone or even the larger move down before the up move, right? The larger demand zone, that on its own, if you had actually waited and had the patience that I don't, would have been an easy 1 to 15 secured on that, right? Now, I myself didn't do that, so I'm not going to preach that I caught a 1 to 14 off of a 15-second chart, because that's not what happened. I've caught 1 to 30s, 1 to 50s, 1 to 60s in the group and with the group on the lower time frame charts, but in this case, that did not happen, so we're not going to go over that. Now, again, if you were someone that mitigated or managed your risk poorly here, or were more emotional about it, or did not have a set system, then this would have been a loss, and you could have continued to catapult yourself in and lost a lot on this trade overall. I didn't, because I know how I like to get involved, so as a result, I saw this happen and I got involved the way I wanted to. Now, the next trade was done right before I actually got to sleep, so I wasn't actually I wasn't mitigating it or moving it or risk managing it, so I had it collapse at an actual normal area. Now, as price begins to move, I'm still expecting overall bullishness on this. So part of the reason why I did this was because I was still expecting potential bullishness from some of the demand zones in this area and potentially even lower. I didn't know exactly where. All I knew was that price potentially wanted to run the low established by the lows we actually just traded, right? So actually the low that just liquidated the entry that we got that gave us profit is actually about to get liquidated, and that's what I was thinking and operating under. Still operating under the fact that price could continue to shift bullish. However, overall it is still bearish. I wanted to actually see sells from areas up in here at around the 1745 level. You know, that never happened, but we still made profit and overall only had profitable trades on gold in the last day, because this was last night. This was actually, this original trade was at 9 a.m. and this one was later in the day on a 15-minute chart. So as you can see, price gets up here and begins to break down the structure. At the same time that it's doing this, it's leaving behind, as we always talk about, the snowflake rule. There is Wyckoff right here. Now, I myself, of course, marked it up for you. This again is an example of a type 2 distribution, right? Whoops, let's get this little guy out. So this is a type 2 distribution. So what's actually happening here is we are not actually having a UT and then a UTAD. Instead, we're having the UT that acts as its own UTAD. So I know a lot of people maybe get confused by this, but again, go check out some of Wyckoff's work. Go look at some of the schematics. And if you don't want to, wait for the video on Wyckoff to actually come out. So as we work our way through this, again, you could have used multiple areas in here. You could use buying climax, AR, ST, up thrust, right? Or you could use what I did in this case, which was this being the buying climax. I like this impulse. I liked it as the final buy up move. So we had the buying climax, follow that down to the automatic rally, creating intermediary lows or trend line, whatever you want to call it. That trend line getting liquidated by this mini demand zone, which is intermediary, which is again an example of how you might have gotten stopped by looking to trade the buys on this, right? Without recognizing what your overall bias is. Overall, my bias was to see price come up here. However, I wanted to see liquidation of this and longer term bias to come from these areas here, okay? So we have price come into here and drop down. At this specific point, I am only interested really in this last supply zone, the last up move before the down move, to be a seller. And however, as we follow this down, the real moves that began to break structure and the sign of weakness in phase B and made the real sign of weakness actually came from this point right here, which is why at that exact point, I had sent out the overall 15-minute sell, which was, where was it? The overall 15-minute sell off of, as you can see, the this stop loss is just above this demand zone. So this last up move before the down move. So this is the actual move that created the break that wanted to break down before sign of weakness is B and to form the sign of weakness. So at this point, again, I was cognizant of the fact that price could have made a run to here. And if it did, then I would have potentially looked for more confirmation to get involved. However, I was happy with this being the test, with this being the last point of supply. And I was looking for another point, last point of supply to form in here. So at this point, I was anticipating that most likely price was going to give me a new distribution. And again, if I was trading the lower time frames, I would have looked inside of here for lower time frame confirmation. However, I was about to go to sleep. I was tired of shit. I had my melatonin, so I was already passing out and I didn't want to wait. So instead, I just sold this as it is at literal market whenever it was here. Stop loss just above the high, and I took my take profit down at this 50% of the demand zone, because I recognize that if price didn't want to liquidate this and then continue lower to give me a buy setup from down there, it would come to inside of this area, mitigating some potential imbalances or demand zones or refined demand zones inside that area, and then continuing higher. So instead of, you know, putting complete risk on, I actually waited for this to happen and then I went to sleep. And as you can see, a very simple 1 to 5, no partials along the way, nothing of that sort, just a 1 to 5. However, it's still in line with the way that I trade. It gives me the setup that I need. It shows me the breaks of structure that I need. It begins to break down, leaving behind supply and demand zones that I want to see. And I use those supply and demand zones to get involved with proper management, with proper directional bias. So again, those two things are resounding and those two things are still true. All I cared about in this case was, how am I going to manage this and how am I going to get involved? Right? That's it. Those two things are already preemptive, pre-decided, and based on an understanding of the market that I carry and now that a lot of my own students carry. So lo and behold, price, and again, this is a 15-minute chart. So again, the same thing you saw here with Wyckoff occurring in the form of an accumulation, a type 2, and then having an entry. We're having the same thing happen, a type 2 distribution. Just so literally, if we flip this, where's the invert scale? If we flip this very quickly, that is an accumulation schematic, a type 2 accumulation, right? Selling climax, AR, ST, a sign of strength in phase B, an ST and B that acts as a spring. This move away, which is showing you the sign of strength, that shows you that it wants to be potentially bullish, right? The last possible area of demand in this case that wants to be tapped, those areas get tapped. As they get mitigated, we might have extra Wyckoff and confirmation if you wanted to wait on the better entry. Hence why some of the people in the group got an even better entry, and hence why some people even waited for this move to start before they got an even better entry in these areas to see even lower, in this case, higher prices, but since it was gold and it was selling off today, before they saw even lower prices met. Okay, and from there on out, we had our overall sell. And as you guys can see, we have that tapped, and you can notice that it started to distribute, maybe has a sign of weakness, a potential UTAD or UT, and then we do get the complete breakdowns. Price gets completed at that point, and from there on, I'm not sure what it does. Yeah, we just have the complete dump. At this point, I myself, I might consider buys, but I still don't think buys are that good here. I'm overall still bearish on this, and I thought it was going to make a higher run. But it's not in this case, it's just dropping, and I think it's just creating some liquidity right now. But again, I'm not trading this right now. I'll have to look into deeper price action. We're going to work through it in the group. So I wanted to put this video out very quickly because I wanted a lot of you to understand what the two main things that are potentially holding you back are, and how you can basically use those to take advantage of where you are in your progress right now. Whether you're extremely advanced and you know what you're doing and you're still getting good trades, or you're not as advanced as you should be or as you want to be, and you're not getting the trades you want to, ask yourself what validates your bias, and how, and what is your bias, and what is your management. Is the management that you bring to each trade the same type of management every single time, or are you switching it based on the way candles are printing? Or is it based in the way candles are printing, right? There are multiple questions that you have to ask yourself as to how you mitigate and manage your positions. Additionally, there are multiple questions you need to ask yourself about how you decide on bias, how that bias is continuously validated, or how that bias is invalidated, and then you need to do the most important thing, which is either forward test or back test your ideas in the market. So again, if I saw Mars last night and it glared red, more red than it was the last few days, and I decided to buy every time it glared a little bit more red, as long as I tested that and it seems like the market, like the gold market, wants to sell off every time every time Mars glares red, then guess what? I'm gonna sell off gold every time Mars glares red, right? If I don't know, you can get really weird about this. But the reality is you need to find the groundwork in what your strategy is set in, whether it's a fully retail strategy or a fully moved away top-down understanding of institutional trading side strategy with unmitigated supply and demand zones, whatever it may be, right? It does not matter. What matters is how you validate that bias and how you enter your trades with your risk management. So thank you for watching, guys. I hope you guys enjoyed this. This was just two very quick trades we got to take on gold in the last, literally yesterday. And I hope this made a lot of sense. I hope you guys use this to understand some more about Wyckoff, to understand a little bit more about institutional order flow and tapping into unmitigated supply and demand.